So it's easy to know what your credit score is. However, do you know the factors that make up your complete credit score? If not, then no worries, because in this video, we will be discussing the top 5 things that affect your credit score, and I will also provide you guys some tips on how you can manage it. What's going on, guys? Chris Robinson again, and I'm just here to remind you guys to smash that like button before we get started. And if you haven't already, don't forget to subscribe. All right, so I want to first start off by covering some of the basics behind your credit score. It's important to note that your credit score range anywhere from 300 all the way up to about 850 points. Also, there are 5 main factors used to calculate these credit scores. Lenders use these credit scores to figure out how likely you are to pay this debt back, and as your credit profile changes, so does your score. So that being said, knowing the type of accounts as well as the factors that affect your credit score will give you the opportunity to maintain a good credit score or improve it. Now, let's figure out how exactly is our credit score calculated. So your FICO score is calculated based off 5 different categories, and these categories are payment history, amounts owed, credit history length, credit mix, as well as new credit. Payment history makes up about 35% of your FICO score. Amounts owed makes up 30%, credit history length makes up 15%, credit mix makes up 10%, and new credit also makes up 10%. It's also important to know that although this is the formula for calculating your credit score, everybody is different and everybody's credit scores is unique. And each one of these categories play a different part on how your credit score is determined. So now that we know the formula behind calculating our credit score, we must also know that our credit file contains information about 2 types of debt. That is an installment loan as well as revolving credit. Installment loans are loans where you borrow a fixed amount of money and agree to make a monthly payment towards the overall balance until you pay off the loan. Example of this can be auto loans, student loans, personal loans, and mortgages. Revolving credit, on the other hand, is mainly associated with credit cards. These type of accounts have a credit limit in which you have to make at least a minimum monthly payment according to how much credit you use. Revolving credit can fluctuate and doesn't typically have a fixed term. And overall, these 2 type of accounts keep a record of your debt as well as your payment history, which makes it a very important factor for calculating your credit score. So the diversity of our credit accounts is also an important factor for calculating our credit score. This is also known as credit mix. So you may have recognized credit mix from our credit calculations formula. And one of the main reasons why I give it its own category is because this is often overlooked by many consumers. Credit mix is referred to the different types of credit accounts that you have on your credit report. And these can range anywhere from mortgages, loans, credit cards, and etc. And as an important note, having a least diverse credit portfolio doesn't necessarily mean that your credit scores will go down. However, lenders do sometimes like to see how you can manage and handle different types of debt. Credit mix account for about 10% of your FICO score and can be a major factor for you achieving a top score. Alright, so here are some things that you must avoid so that you won't negatively affect your credit score. First and foremost, since payment history makes up the largest portion of your credit score, you must avoid making late payments, and that means being past due for more than 30 days. Secondly, try not to use too much of your available credit because this makes up 30% of your credit score, and having a high credit utilization does drastically affect your credit score. Also, try to avoid applying for a lot of credit in a short period of time, most specifically 24 months. And lastly, this one should be pretty much self-explanatory. Do not default on any of your accounts, and this includes foreclosures, bankruptcies, repossessions, charge-offs, and etc. And lastly, let's discuss some additional things that you must know about your credit score. And for those of us who have not established our credit score yet, I do highly suggest that you watch my previous video in which I explained the 3 most effective ways to establish your credit score. Paying your bills on time and keeping your credit utilizations low will keep your credit score at an all-time high. And if you do have a high balance on any of your accounts, be sure to make more than a minimum payment on the account just so that you can pay it off faster and avoid any additional interest. It's also important that you monitor and manage your credit reports often because there may be some inaccuracies on there that you may want to dispute to keep your credit reports healthy. And lastly, try to utilize what you already have available and try to avoid seeking too much new credit. If you're looking for a credit increase, just simply request a credit increase with your current credit card holders. Alright guys, so that's the 5 effective things that affect your credit score in a positive way or a negative way. If you find this video interesting, please smash that like button if you haven't already, as well as don't forget to subscribe, and I see you guys in the next video.